SpaceX just plummeted nearly 5% in a single session, and the entire market is asking one question. Is this a once-in-a-generation buying opportunity, or the beginning of a liquidity wipeout that catches everyone off guard? There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade today that most traders are completely blind to. Let's break this down. Here's the verdict, plain and simple. This market is range-bound, trapped between the bulls who want to buy every dip and the bears who see an exhausted, overextended asset that's priced for perfection. The bias today is fading the extremes, but only until we hit one critical number. Write this number down. If we break 189.40 on a daily close, the entire structure resets and we are looking at a potential freefall toward 177. Here's what the herd is doing right now. Most retail traders are buying this dip because they see scarcity. They see the board edition of Roelof Botha. They see the long-term narrative. But here's the problem. The algos don't care about narratives. The algos see an RSI at 100, a MACD reading of 45.54, and a 4H divergence that's screaming exhaustion. The smart money? They are waiting. They're watching 189.40 like hawks, and they're ready to pounce in whichever direction the break goes. Let's get into the chart. And I mean really get into it. Starting from the weekly time frame, because this is where the foundational structure lives. The weekly trend is a strong buy, and I want you to understand what that means. The 200-week moving average is sitting right here at 137.03, acting like a brick wall of support that has held for years. The 50-week MA is at 142.73, the 100-week at 139. All of these are sloping upward, confirming the long-term bullish trajectory. But here's where it gets interesting. The weekly RSI is at 100. That's not a typo. 100. This asset is more overbought on a weekly basis than almost anything I've seen in 15 years of institutional trading. And the MACD on the weekly? 45.54. Massive, historical readings. Now let's compress to the daily time frame, because this is where the real action is happening. The daily trend is also a strong buy, but look at today's candle. We've got a massive red bar that's engulfing the previous green candle. This is a bearish engulfing pattern, folks, and it's happening right at the R1 resistance level of 219. The MA20 on the daily is at 152.48. That's way below current price, telling us we've got a massive expansion away from the mean. This is the definition of stretched. Here's what most traders miss. The 4H chart is where the divergence is hiding. Look at this 4H negative divergence. Buyers are exhausted. Price made a higher high at 219, but the MACD made a lower high. That's classic divergence, and it's why we are seeing this violent rejection. The 5H trend is still a strong buy, but the 1H trend has flipped to sell. This is a micro-trend reversal that's trying to trigger a larger correction. Let me give you the exact levels you need to watch, and I mean watch every single tick on these. Daily support S1 is at 189.40. This is the line in the sand. Below that, S2 at 177, and the ultimate backstop at S3, 158.89. Resistance. We just rejected from a 1 at 219. Above that, R2 at 238.03 and R3 at 250.42. The pivot point sits at 207.52, and that's where we might see a retest if buyers step in. I want you to notice something. The ATR is 19.18. That means we can expect daily moves of nearly 20 points in either direction. This is not a sleepy asset. This is volatility on steroids, and the CCI. 127.69, overbought territory. The Williams are at negative 14.98, overbought. Everything is flashing extreme readings, and that means one thing, a move is coming. The only question is direction. 2.4 fundamental driver and crosslinkage, 430 to 630. Now let's talk about the news, because this is where the narrative gets really interesting. Yesterday, SpaceX announced Roelof Botha to the board of directors. For those who don't know, Botha is a partner at Sequoia Capital, one of the most respected venture firms in the world. On the surface, this should be bullish. It's an endorsement of SpaceX's governance and long-term vision. but the price is bleeding. Why? Because the market has already priced this in. The scarcity trade narrative has been running for months, and the news flow is now priced to perfection. When you get a headline that should be positive and the market sells off, that's called by the rumor, sell the news. But there's more to this. The analyst sentiment we are seeing is increasingly bearish on the scarcity trade. Articles are surfacing with headlines like SpaceX scarcity trade won't last forever. And that's the shift happening in real time. Institutions are starting to question whether the scarcity premium is justified when the private market is starting to open up. Here's the cross-asset linkage you need to understand. SpaceX sits in a unique category. It's a private equity play that trades like a public stock on secondary markets. It tracks risk sentiment like tech equities, but with a liquidity premium baked in. This means SpaceX is highly sensitive to risk-on or risk-off flows. If the Nasdaq has a rough session, SpaceX will bleed more because of the liquidity discount. And right now, tech is vulnerable. The 1 to 2 week directional lean is neutral to bearish. I think we see a test of 189.40 before any serious buying emerges. The event that invalidates this bias? A daily close above 219. If we take out that resistance, the shorts will panic and we could see a melt up toward 238. Here's the thing. Do you think SpaceX holds 189.40 this week? Comment yes or no. I'm tracking consensus and I want to see where the crowd is positioned. Most people skip this section. That's exactly where the money is made. Keep watching. I'm going to give you 3 distinct strategies for this SpaceX setup. Each one fits a different risk profile and trading style. I'll give you exact entries, exact stops, exact targets, and, most importantly, I'll show you the risk-reward on every single one. Strategy 1, the sniper, conservative. This is for the disciplined trader who wants the highest probability setup with limited downside. The trigger condition is simple. Wait for price to reach the S1 support level at 189.40, and confirm with a 4H bullish reversal pattern. That means I want to see a hammer candle, a bullish engulfing, or a 4H close back above the level after a brief pierce. The entry is at 189.40 on a 4H close above that level. Your stop loss goes below the 4H demand zone at 185.50. That gives us roughly 4 points of risk. Now here are your targets. Target 1 is at 198.00, which is the previous 4H resistance and the midpoint of the daily range. That gives us a risk-reward of approximately 2.1 to 1. Target 2 is at 207.52, which is the pivot point and a major psychological level. That gives us a risk-reward of 4.5 to 1. What voids this setup entirely? A daily close below 189.40. If we see a strong bearish daily candle that takes out S1 and holds below, the support structure is broken and we need to step aside. The invalidation node is clear. Void if daily candle closes below 189.40. The sniper, conservative, entry, 189.40, 4H close above, stop loss, 185.50 take profit 1, 198.00 take profit 2, 207.52 risk, reward, 1:4.5 R invalidation, void if daily candle closes below 189.40. Strategy 2, the active trader, standard. This is for the trader who wants to participate in the volatility without waiting for the perfect sniper setup. We are going to look for a pullback to the MA20 level on the 1H chart. The MA20 on the 1H is currently at 196.40. That's our mean reversion target. We want to see price pull back to this level and show a bullish rejection candle, preferably with a bullish MACD cross on the 1H. Entry condition is a 1H close above 196.40 with confirmed bullish momentum. Your stop loss goes below the 1H demand zone at 192.00. That's 4.4 points of risk. Target 1 is the previous daily high at 219.00. That's a 22.6 point move, giving us a 5.1 to 1 risk reward. Target 2 is at 225.00, which is above the R1 level and into no man's land. That's a 28.6 point move and a 6.5 to 1 risk reward. Once target 1 is hit, we implement a trailing stop rule, Move your stop to break even and trail it under the 1H20 period MA. What makes this setup work? It's a mean reversion play in a strong uptrend. The weekly and monthly trends are still buys, so we are looking for the continuation pattern invalidation. If price breaks below 189.40 before reaching our entry, the setup is dead. This is a pullback trade, not a breakdown trade. The active trader, standard, entry, 196.40, 1H close above, stop loss, 192.00 take profit 1, 219.00 take profit 2, 225.00 risk, reward, 1:6.5 invalidation. Void if price breaks below 189.40 before entry. Type your SpaceX price range for tomorrow in the comments now. Let's see who's aligned with the institutional flow. Strategy 3. The aggressor, high risk. Now for the traders who can handle heat, the aggressor play. This is a momentum chase on the 15-minute time frame, and it's only for those who can lose small and manage risk aggressively. The trigger is a breakout above the 15-minute opening range high at 193.50, with a confirmed 15-minute close above that level. This is a counter-trend play if the daily bias is still bearish, but we are looking for a quick momentum grab. Entry is at 193.50 on a 15-minute close above. Your stop loss is ultra tight, just below the 15-minute support at 190.00. That's 3.5 points of risk. Target 1 is the 1H50 period MA at 198.50, which gives us a 1.4 to 1 risk reward. Target 2 is the 200 level, a psychological round number that will attract profit taking. That gives us a 1.8 to 1 risk reward. Here's the explicit warning. This trade has a lower probability because we are chasing momentum against the 1H bearish trend. You need to be ready to cut losses immediately. If we break below 190.00, you are out, no questions asked. No waiting, no hoping, no maybe it'll come back. You lose small and you live to trade another day. Invalidation is simple. If price fails to break 193.50 within the first 30 minutes of the session, the setup is void. The aggressor, high risk, entry, 193.50, 15-minute close above, stop loss, 190.00 take profit 1, 198.50 take profit 2, 200.00 risk, reward, 1:1.8 invalidation. Void if not triggered within first 30 minutes. Warning sign only for aggressive risk management, tight stops. Mandatory never risk more than 1 to 2% per trade. No positions through high impact news. Stops are non-negotiable. This is how you survive to trade the next big move. SpaceX can gap 10 points on a headline. If you're caught without protection, you will get burned. Protect your capital at all costs. Let me summarize the single most critical level for tomorrow's session. 189.40 is the line that separates a healthy pullback from a structural breakdown. If we hold above 189.40, I expect a retest of 207.52 and potentially 219. If we break below 189.40, we are looking at a cascade toward 177 and possibly 158.89. Tomorrow's focus will be the secondary market volume. We need to see if institutional players step in at these lower levels or if they're content to wait for even better prices. If you want the full breakdown on how this SpaceX setup correlates with the broader S&P 500 divergence, that video is live now. Tap the end screen, smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.